Let's start with the topic of the day, inflation. What are the millionaires saying about inflation? What are some of the headlines you'll be delivering on CNBC tomorrow?
Yeah, Tyler, good to see you. This is the first time that the millionaire in the survey said that inflation is their #1 threat, both to the stock market, the economy, and their personal net worth. So you look at inflation, 37%, that's the largest number, say it's the biggest risk to the economy over the next 12 months. Again, that's the first time we've ever seen inflation rank at the top of this list. 29% say it's the biggest threat to their wealth. About a third saying they're not at all confident in the Fed's ability to manage inflation. We're going to dig into that number a little bit more later. And then you get to how long is all this going to last? Now remember, the millionaires are typically the most optimistic in the whole investor segment. Not very optimistic here on inflation. About 42% say it's going to last between 1 to 2 years, 19% 2 years or more. So that's a majority who say inflation is going to last more than a year, possibly even 2 or 5 years. Are we going to hit a recession? Again, this is typically a very optimistic group. We haven't seen many signs of recession in our surveys, but now we do. Most of them say we are going to have a recession this year if we're already in one now. So if you look at, we're in one now and we're going to have one this year, that's a majority of millionaires say we're either in a recession or we're going to have one. And then what about the S&P? This is what matters. Typically, again, this is a group that is very early to buy when they see buying opportunities. They don't see buying opportunities yet. They say, most of them, that we're going to be down at least 10% or more this year. And again, we're going to go into some interesting subsectors of this at some point.
These are the majority opinions or the pluralities across the board. Are there certain groups, types of millionaires maybe, who tend to take a contrarian view, maybe a more optimistic view?
Yeah, Tyler, this is the big headline from this millionaire surveys. The millennial millionaires have become not just sort of different kinds of investors, but an entirely different species of investors. So let's look at how they view optimism, the economy. 72% of millennial millionaires say the economy is going to be stronger at the end of this year. A majority say inflation is going to last 6 months to a year, certainly much more optimistic than the baby boomers. And more than half, a majority, are very confident in the Fed's ability to manage inflation. So on the economy, on the market, on inflation, on the Fed, they are very optimistic. You look at inflation, what are they doing in response to this? Well, they're buying more stock, they're buying more bonds, probably short-term bonds. They're not keeping nearly as much cash as the baby boomers. And the baby boomers mostly are, as you can see there, a large number of them doing nothing, number of millennials doing nothing, about half. So they're active in the market, they're buying more stock at a much higher rate, twice the rate as baby boomers, and that again reflects that optimism. And finally, this is the important part. Millennials using advisors. 89% of millennials are using an advisor right now. You look at that versus baby boomers, 69%. It's a big difference. And then an even larger number, I think it's sort of close to 70 or 80%. 80% of millennials have consulted their financial advisor when it comes to inflation. That is a much larger number than we see for baby boomers. And then you look at inflation, rising rates, and slower spending. I know we're going to get to that in a minute, but another big split there between millennial millionaires, Tyler, and the boomers, and those even older.
You know, I was struck there by one thing where it showed that more of the baby boomer millionaires have a higher portion of their wealth in cash. I, as a baby boomer, would say that may have something to do not with my optimism or my sense of the future, but the fact that my investment timeline is shorter. In other words, I'm going to need that money sooner. I've got a sophomore in high school. I'm going to need that cash to pay college bills in 2 years, not 22 years.
100%. And that timeline is a key for why the millennials that have a lot more runway left are going to be more aggressive here because, again, if they think buying Apple or Google or Amazon right now, maybe they're going to lose in a year or two, but in 10, 20 years, they're still going to be ahead. So that's part of it. The other part of it, of course, is that millennials have not experienced an inflationary stock market like baby boomers have. So they perhaps have a false sense of optimism when it comes to the stock market because they've never seen one before.
Yeah, and I won't say they've never seen a bear market in bonds before, but a lot of them haven't, because the last one was really in the 90s. The last really searing bear market in bonds was in the 1990s. All right, let's switch gears. Our next panel, we're going to hear from the CFOs of Home Depot, Royal Caribbean, and I suspect they're going to tell us that wealthy consumers are still spending money to remodel their homes. They want to take vacations. They want to book cruises. What does the survey say about how millionaires are handling higher prices, what they're doing?
Yeah, you're right. In general, millionaires in the high end has held up surprisingly well so far, as we've seen other parts of the consumer economy start to pull back on spending. Everything at the high end is still going strong. But here's where the millennials come in again. If you look at, broadly speaking, throughout our survey, millionaires were not cutting back much on homes, on vacations, on cars, on all the big ticket things, dining out. But look at millennials. 44% of millennials are delaying a purchase of a home. That's going to matter a lot because they're, of course, a big growth market for the real estate market. 48% of millennials have delayed purchase of a new car. 62% are going to give less to charity. And then this is the key thing. Again, broadly speaking, millionaires are not going to change their spending much, at least not yet. But millennials, when you look at dining out, driving, vacation, much larger numbers for millennials. So financial advisors need to understand these millennials, they really want advice right now. But financial advisors also have to be aware that in their spending lives, millennials are really pulling back and seeing this time of austerity because of inflation and because of higher borrowing costs.
All right, so 55, and the effect of those higher borrowing costs, and we may see an interest rate hike of 3/4 of a point today. Though, think about this, Robert. You've got interest rates on mortgages now well above 6%, well above 6%. That's going to change the housing market in a big way, right?
100%, especially since prices haven't come down yet. You've got basically a squeeze and a freeze. With millennials. They can't afford the price and mortgage rates are coming up. So you're right. Until we see those prices start to come down, they're going to have to come down a lot to make up for that higher mortgage rate. You're not going to see these younger buyers buy their first homes.